Hi traders, welcome to Monetize. It's time to record the new weekly forecast video for the week starting on October 17th. As usual, let's begin with dollar index. So the first instrument is DXY, and let's quickly run through the weekly time frame. Everything is bullish on the weekly. No signs against as on the weekly. And as per the latest CPI report, which is the inflation numbers from the US, the inflation is again high. So it gives one more reason to the US Federal Reserve to look for the aggressive hike in the upcoming months, which means the dollar should remain strong fundamentally. And technically, as per the weekly chart, we have no signs against for the dollar bulls. Quickly going to daily now. As per daily, in my last video, I was anticipating a slowdown around this area, and we got a downward candle, a bearish candle from this area. But to be honest, it never continued the momentum to the downside, and it again bounced up after the CPI report. And apart from that, we do not have anything in favor of the bears on the daily chart as well. So this is the previous structure breakout. So this is the base, and now it has to clear the previous high, which is this structure, and officially I cannot call this level as the base until we have the breakout to the upside. So I'm waiting for the bullish breakout, but everything remains bullish as per the higher time frame scenario. No signs against. Let's quickly move to 4 hourly now. On the 4 hourly, if I calculate the fib retracement from the previous base to the recent high, we got the pullback exactly to 61%. So this was the previous bullish move, retracement to the 61%, and now it has formed a base around 38%, and everything looks bullish. In short, I look for the buying opportunity on each and every dip regarding the dollar based instruments. Now the next instrument I'm going to cover is gold. I'm removing the extra drawings, and during the week I've posted in my private Telegram channel that I was anticipating dollar to go down on from the same resistance level, and I was anticipating inverse reaction in the gold. So I was anticipating gold to touch the new highs, but it failed to do so, especially after the CPI report, and it got the retracement from the previous level. So just to mark, this was the previous high, this was the previous break of structure, and as per the rules, once the market breaks below the structure, a retracement and then continuation to the downside. And let's check the fib numbers. I'm marking from the previous high to the latest low, and even as per the fib numbers, we got the retracement exactly to the 50 to 61 area, and now everything looks good for the gold to continue to the downside. Currently it's moving inside the downward parallel channel, so there is a high probability that it's going to go lower. And let's check the levels. I'm marking the fib extension starting from the previous high, and the next level in sight is 1610, followed by one second. Okay, after 1610, the next level in sight is 15 1577 as per the Fib extension. Ultimately, it's going to 1536. So is it going to be a straight run to 1536? I don't think so. So it can be a move down to this area, a bounce up into this resistance, and then continuation downward, something like this. So let's see. Dollar should continue upwards and gold to continue downwards in the upcoming days and weeks. Now let's talk about some other instruments. So let's cover NASDAQ. NASDAQ should be, yes. All right, let's move to weekly. As per the weekly chart, everything remains bearish on the NASDAQ as well. So the market remains in the grip of bears, nothing in favor of bulls right now. And what I've done here, I've marked the Fib extension on the downward cycle. So first cycle down, pullback, calculated on the Fib extension. Second cycle down, pullback, again calculated on the Fib extension. So first cycle is marked with the blue lines, and the second downward cycle is marked with the green lines. And the magnet zone is here, which is around 10,429. So the next level inside for USTECH, which is NASDAQ, is 10,429. And if it continues further, then the next magnet zone is around 9,527 to 9,111. So this is the zone I'm talking about. Now let's see. As per the previous bullish cycle, if we mark the retracement levels on the basis of Fib retracement, so I'm picking the Fib retracement starting from the lowest point, taking it to the highest. So yeah, so 10,429 is exactly coming on the Fib retracement level of 61.8%. So it is a super magnet zone, like it's coming from, it's a triplication area, because we have two Fib extension zones coming at the same place and the Fib retracement zone coming at the same place, followed by 78.6%. So if the market moves in between 61 to 78.6, which is a high probability, then our second extension magnet zone will come into play, which is from 9,111 to 9,527. So everything on the higher time frame is bearish on the chart of NASDAQ. Let's move to daily now. Even on the daily, I do not see any signs of slowdown, because we still have a bearish cross of the MACD lines, and even on the histogram, although they have shrinked, but it failed after the news. There was a bullish run, I think just to collect the orders. So I think there was a run. This is the bullish candle I'm talking about. But the point to be noted, it failed to close above this resistance area, which was at 11,130, followed by bearish continuation. So weekly bearish, daily is bearish. Let's move to 4 hourly now. On the 4 hourly as well, it is bearish. Reason being, same concept. This is the bearish trigger point. This is the bearish BOS. And as per the rules, once the market breaks below the structure, a retracement and then continuation in the same direction. I'm quickly marking the Fib levels from this high to the recent low. Again, it retraced exactly to the 61.8 and it's continuing downwards. And we also have almost equal highs. Not I cannot say very clearly it's a hidden bearish, but seems to be hidden bearish, like just giving the benefit of doubt. So NASDAQ remains bearish on the charts. Let's move to Nifty now. Nifty. Okay. Now, in my previous video, I've explained because Nifty failed to break above its previous high, so the game came in the control of the bears. So market was again turned bearish. Market again turned bearish, and this is the scenario. So if I mark the fib retracement from the previous low to the recent high, and I'm also marking the order block area. So this is the order block area, which is again coming in between 61.8 to 78.6%. So there is a high probability that in coming days and weeks we'll see Nifty marching towards 15,821 to 16,315 level. Now on the daily, the scenario is after getting a reversal from this high, it broke below this structure area. So this is the structure for the, this is a favorable structure for the bears because it has broken below this support area. Again, breakout structure, bump into the structure area, and now continuation to the downside. But the point to be noted here is we have a minor support around this area. So this support area, which is from 16,500 to 16,750, I think it will not give way to the bears to take the market directly to 16,000, 15,800 levels. So there is a probability, I'm just anticipating, that it may keep on ranging for a while and then continue downwards. So two scenarios: either it will keep on ranging between the previous resistance, which is around 17,500, and the current support around 16,750 to 16,500, and then it breaks the sideways consolidation to continue downwards, or it can be a direct run as well. It all depends on the strength of dollar in the coming days. So this could be the second wave up and now continuation to the downwards. Either ways, I'll be interested in looking to get into sell setups on each rise for Nifty, as explained in the NASDAQ as well. So dollar index covered, gold covered, NASDAQ covered, and Nifty covered. Now the currency pair which I'm going to talk about is EURJPY. Let's remove all the lines, all the drawings, and starting from the monthly time frame. So this is the scenario on the monthly, and on the monthly the downward cycle was something like this: a move down, correct, a move up, second push down, ultimately closing with the bullish divergence. On the histogram, almost equal. So this was the scenario long way back, starting from here, push down, and now second push up. So let's mark the fib extension starting from the lowest point on the monthly, first push up, and like this. Currently we are exactly on 0.618 levels, and no signs against for the bulls. Everything on the MACD histogram and the MACD lines, they are bullish. Price action is bullish. So it seems that the bulls are ready to they already have the control and they are ready to cross beyond 0.618 level, and the next level in sight is 158 as per the 0.786 on the monthly chart. So this could be our next target. So let's mark this zone around 0.786 levels for the next target. Moving to weekly now. On the weekly, no signs against, everything is bullish. Histogram, they are pointing higher. MACD lines, they are pointing higher. Even the price action is bullish. And it has formed a base around this area. So this is the base I'm talking about. So a good support around 138.80 to 140. And the next target in sight is 158, which is like I'm talking about monthly target. So it will take some weeks and months to reach there. It would not be a direct run. So let's look on the daily now. On the daily, again, everything is bullish because I do not have any bearish divergence coming in play. MACD histograms, they are rising. MACD lines, they are rising, and even the price action. And as per the daily chart, the latest support in play is this one. And if I'm going to mark the next level, okay, I'm doing it from here. So 100% of the current upward cycle would be around 149.59, or to round off, we can say 150 level. So currently it's at 144.58. There is a high probability of another 550 pips move to complete the cycle around 150. So how we can approach? Let's say we want to get into trade at the current levels. So let's pick the long tool, marking from the current level. I'll be protecting my stop loss below the recent structure support, and I'll be targeting 150, but it's not a healthy risk to reward ratio. So basically we have to move to a lower time frame to optimize the entry, and to optimize the entry I'll be marking this area. I'll be removing this, I'll be removing that. Okay, so we are trying to optimize to get into the buy trade on the dips in the upcoming week. So if we get an opportunity, let it come back to this support zone, and if we try to enter around this area with the confirmation, so entry should be always after the confirmation as per the rules. So if we open a buy trade around this area with the stop loss below this low, and now let's see if we target the 100% fib extension area, the risk to reward will be 3.7 times. So after optimization only, get into the trade only after the pullback. So this is the plan for the upcoming week. I hope I've explained all the instruments very clearly. If you still have any doubts, you can get back to me. And guys, please show your support, give a thumbs up to the video, and subscribe to my channel. Take care and have a profitable trading week ahead. Bye-bye.